Okay, good afternoon, everyone. At least we're not right after lunch, so we got to get a little energy in here. Very, very quiet in here. I'm not a quiet person. So I hope everybody's had a great conference and enjoyed the lovely weather here in DC. I'm from the South, as you may tell, as I talk, so this is a lot of snow for me. We'll start with introductions. As he said, I am Laura Sullivan. I work for a company called Form3. If you haven't heard of us, please don't tell me, because my marketing people would be crushed, because we've been making a lot of efforts. We started in the UK, but have now started working in the US. We are basically a last mile connectivity to the various payment networks in the US in a modern cloud-based API technology. So with that, I'll move over to Brigit.
Yeah. Hi, everyone. I'm Brigit Carroll. I am policy lead for the Americas at Wise. You might know us as TransferWise, because our rebrand still hasn't stuck. If you don't know us, we're a global payments company building the best way to move money around the world, really focused on our mission of instant, convenient, transparent, affordable payments. And I was a very happy, and still am, Wise customer when I joined Wise about 5.5 years ago, living abroad, sending money back home. So thanks for having me.
Hi, I'm Ken Wong. I'm based out in Toronto. I'm part of the Global Transaction Bank at TD. I look after product innovation and partnerships, but the other thing I do look after is a lot of is industry relations. So I do work with a lot of regulators, especially in the space of payments.
So we've got several Slido poll questions, so if you guys could be prepared for that. And I think we'll start with the first Slido question, which has to do with what do you see as the biggest challenges facing cross-border payments today? And then we've got the whole host of different factors that come up all the time: speed, coverage, predictability, cost, data, availability, and ease of use.
That's not our set of questions.
Oh, yeah. I look down, I'm like, whoa. But I like it coming from a fintech. Yeah. So everybody should answer always to that question about fintechs providing a better experience. I don't know what you guys are seeing on your phones.
So whoever's controlling it, it's the wrong question. Never mind, let's just go straight into it then.
Okay, well then we'll go move right along. So we thought we would start with the current state of cross-border. I thought maybe we could compare and contrast. So Ken, maybe you could start and talk about, from banking perspective, how is it that banks affect cross-border payments today, and then we can move into Brigit, kind of the new brave new world that Wise is in.
Sure. I'm just going to go a little bit off script a little bit, right, from what we talked about. The question I always ask everyone is, from a payments perspective, who is the client, right? And most people answer, oh, the person I bank and I'm doing the payment for. I actually go the other way around. I say the client is the person who wants the money, which I actually don't have a relationship with. Because if I can't move money to that person, because I'm not part of a certain network, then I haven't served my client, right? So if you look at it from that perspective, I would say the current payment landscape is very, call it disintegrated, very passed out, because we are trying to move money to someone in the way that the person wants to receive it. The challenge that we have as banks is, and as networks too, is not every bank is a member of every network, and not every network has full membership of every bank. So the only way to get ubiquity and to move money around the world is through multiple hubs, through partners, through correspondent banks, through potentially multiple payment networks. So that makes life very, very difficult, because sometimes we actually just can't get money to the end beneficiary, right? And the thing that happens to us from a bank perspective is clients always ask us, why are cross-border payments so difficult? Why do you want this information, that information, and all that kind of thing? It really comes down to that country's regulations to say, hey, for me to put a payment into the country, I might need a purpose of payment code. I might need some pieces of information. So when you move money to every single country based on what the country's requirements are, based on regulation, based on market practice, based on whatever, there is no one payment instruction that you can give, a client can give, and can send it anywhere. What makes things even worse is things like purpose of payment codes. We haven't unified that or harmonized that. The countries that have purpose of payment code, they have their own codes too, right? Even though code A and code Z for two different countries might mean the same thing, they're not interchangeable. So that makes payments even more difficult. All right, I'll stop there and let.
So Brigit, maybe you want to touch on the alternative that you guys have developed with Wise.
Sure. So I think it's interesting, at least in the US, we see a lot of innovation on the domestic payment side, right? So many of us use new applications like a Venmo or a Zelle, maybe a card payment, point of sale, but in terms of person to person, we see how that's kind of built up and everything's become really fast and really easy and seems to be free. But then on the cross-border side, we don't seem to have that quite as much at all, and I think that's where why Wise was founded and where we sort of come in. Interestingly, like I lived abroad for almost 10 years, and in Europe, I was really used to doing bank-to-bank instant transfers, and then I was very shocked. I mean, it seems really obvious now, but I was shocked that I couldn't do that when I came back. So just kind of looking at how the domestic payments infrastructure then impacts how we can also do cross-border payments. Of course, we're going to talk about a lot of the challenges and the complexities around that. But Wise, over the past 14 years since we were founded, has been really laser focused on fixing this one problem. And so I know we're going to get into that in a second, but really trying to answer to Ken's point, you know, a regular person doesn't understand why a payment takes as long as it does, or why they can't have transparency on when it's going to land or how much it's going to cost. And so we've just been really focused on trying to deliver that for them, whether that's a consumer, a small business, or enterprise client.
And Brigit, maybe you could touch on how the regulatory aspects are a challenge for you guys as well.
Yeah, absolutely. So just to kind of level set and give everyone a little bit of context, so Wise is a regulated SMB in the US, but in other jurisdictions, we hold licenses like e-money or payment licenses, right? So we've kind of watched this payments modernization and sort of the evolution of payments regulation across different jurisdictions, and I think there's a lot that we can learn from that. Of course, like we talked about yesterday, we saw the G20 panel and some of the targets around that. We see a few sort of pillars to deliver on, so whether that's through speed, through access, convenience, cost, things like that. But I think there's a lot that the US can learn. Actually, recently, Canada has already moved forward in their new retail payments framework, RPAA, which basically is going to bring a payments framework to a company like Wise. But through that, they're also opening up access to the payments systems, basically together. So it's interesting to watch, and we'll see. I know we're going to talk about that in the US context as well.
So I think, meanwhile, our Slido has showed up. If you want to answer, that would be great, and give us that feedback on what you think the main challenges are facing cross-border payments today. Let's give it a second. But with that, Ken, why don't we segue into that? So what do you think that the challenges are? You mentioned regulation. What is that the biggest one? Are there others?
Yeah, I guess I'll take it from a bank perspective. Again, what I mentioned was the only way that we can make cross-border payments today is through correspondence, bank networks, and we're trying to piece it together. The challenge then is because the payment is going in a sequential bilateral basis through different jurisdictions, that means it's going through different rules, different regulations, different message standards. That means things just don't flow very well. And sometimes regulations even slow the payments down. Everyone talks about instant right now, but if you look at the US right now, Dodd-Frank 1073, client says, press a button and says, I want to make a payment. But the bank will not release it for half an hour because of the 1073 rules. Because if they moved it out too quickly, the client has half an hour to say, no, I want it back. But if it's a faster payment, it is gone, right? So what I look at basically, as a correspondent bank is what the client needs. They want predictabilities, or is actually all the things that are said on the slide right now. But I need to look at really 4 things before I give other banks, money service bureaus or whomever, the service of, say, clearing to Canada. One is the network rules itself. So, in Canada, for example, Links, which is our RTGS, specifically says you can put cross-border payments through it. The other payment systems don't quite say that. So the question is, are we allowed or not allowed to? So if it says, if it's silent on that, then the answer might be, maybe I can allow it through. Then we look at the next factor, is, call it regulatory reporting. Regulatory reporting says, in Canada, that the bank who's the final beneficiary, has to do FinTrack reporting. Then I have to look at the actual payment message itself within the payment system and say, is there enough information for me to send to the other bank, number one, to identify there's actually a cross-border payment, and therefore you can do FinTrack reporting, and is there enough information in the payment instruction itself to actually do the FinTrack reporting? Some banks have kind of gotten around of that. I won't say how right now. Then we look at the other rules like travel rules. It says, it's like a bit like the data that goes through too. Or you cannot truncate, you must move all the data through. What does that mean? If I get an MT103 or a PAC008 to me, and I have to translate it into something else, can I actually move all the information through? Last but not least, sanctions filtering. Most domestic systems that, unless it's specifically designated for cross-border payments, banks do not actually sanctions filter those transactions. Again, for example, for Canada, the only payment system that we actively sanctions filter in and out payments is Links, which is our RTGS. So technically speaking, if I downgraded it into, say, our AFT, which is the US version, or ACH, I send it over to, say, Bank X in Canada to be credited. Number one is then, do I violate the travel rules because I don't send all the information through because there's not enough information that you can put through the payment system? Can the other bank identify that it is a cross-border payment so that maybe they can do sanctions filtering? So when we look at a cross-border payment to provide cross-border banking services, we don't look at each of those components one at a time. We have to look at it in whole totality. So it is not just the rule, but the spirit of the rule. You have to piece everything together and say, I don't violate any of those 4 pillars, then you say, maybe we can do it. That's why regulation is really important to, I guess, harmonize how everything works within a country, within payment systems, and make it very clear what we can and cannot do, which in a lot of places right now, it is not very defined.
So I think it's interesting looking at the poll results that predictability is still the top of the list, because one would put forth that that was the whole goal of Dodd-Frank, at least on the consumer basis in the US, to ensure the predictability. So either it's not working or you guys are answering for your commercial customers, which is fine. I wanted to be able to ask these questions for commercial and consumer because I do think potentially the answers are different. But in the interest of time, we didn't go there.
Yeah, I think predictability is important. It's one of the things I've been advocating for a long time too. The question is, why can't we give predictability? Because we have multiple payment rails in each country. The WISE systems or the RTGSs do not give predictability because you can take charges against it. You can say, oh, I can use charges hour, but again, like Canada or even the UK, only in certain circumstances charges hour work, in other circumstances it doesn't work. So if it doesn't work in even in 5% of the transactions, you have no predictability. Right? Predictability also means get the full amount going through. WISE just can't do it, but other systems can. Then the question again, like the 4 pillars I talked about, are we allowed to put it through the other payment system? Or even if we're allowed, from a regulatory reporting, sanctions filtering, can it actually be done? So it's not, I think it's not so much about No, just the payment rail. It's the optionality of payment rails, and the payment rails have to be regulated in a way with the rules and everything so that it does allow it. So the options are there, but they're just closed off to us right now.
And Brigit, from your perspective, what do you see as the challenges and some potential ways to improve on things?
I think there's a few. So maybe just picking up on, I totally agree with what Ken said, but on the speed side, it's interesting because there's been a lot of talk, at least on the US side, about FedNow, and then with Canada's real-time rail, hopefully eventually happening. We've seen a lot of delays. Kind of sad to look back on documents that thought we were already going to be live by now. But I will say, I think speed is one where there's been a lot of talk about these new payment systems, but then it's also like after they launch, what's the actual uptake, both on receive and send, because I don't think we're there yet. But then it's also how can we enable those systems for cross-border payments? So to Ken's point, for example, FedNow, can we use that for cross-border payments? I think right now the answer is currently no. But would love to see clarity on that, and that would enable more payments to be instant end-to-end. And to that point as well, on the speed side, it's not just the US, this jurisdiction, it's every other jurisdiction. I think on the transparency side, we talk a lot about predictability. I think this overlaps with, but when we talk about transparency, we're talking about price transparency, like under the remittance rule, but making sure essentially that our customers understand what they pay when they're making the payment, and it's very clear to them. That, right now, I would say is not necessarily happening across the industry, which we would consider a market failure. Are you able to compare apples to apples before making a payment, how much you're going to be paying for that payment? And so we'd love to see more of a move toward this kind of total cost price transparency. We've seen this movement in other jurisdictions, whether that's an outcomes-based or rules-based approach, for example, in the UK or EU, on making sure consumers can understand what they pay, because we know that this will basically fix this market failure and drive down the costs overall in line with global goals, et cetera. The last one is cost. And again, I think this relates to transparency, but it also relates to infrastructure and other obstacles being undone. But I saw something from the FSB that showed that in terms of the cost of a cross-border payment, more than half of that is usually coming from FX. And so we can't have a conversation about cost without tackling this issue as well. And so those three, I would say, are what we come back to in terms of tackling these challenges. It's not necessarily easy. I think to Ken's point, it's bringing a lot of these pieces together to make it work.
And it's also understanding the actual challenge in itself. So in the domestic faster payments session, in Slido, there's so many questions about cross-border payments through FedNow and RTP, RTR in Canada eventually. To me, it is not just about connecting it and say, okay, I allow. Because the systems, the fast payment systems all say today, you have to do it within 20 seconds. I would bet everyone here right now that there is no way you can do your sanctions filtering within 20 seconds, especially if there's a false positive, right? And if we want to make the payment system better and to give optionality so that we can have full value, we can have predictability, we can't just use the existing rules of the payment systems that exist today, because they're all written for domestic payments, which might mean I don't sanctions filter, it might mean 20 seconds, it might mean a lot of things. But the world of cross-border payments is so different that we need a second set of service levels or rules specific for cross-border payments, even though we're using the same system. Otherwise, it will not work.
So if we could go just quickly to our second Slido question, which we've already touched on, but it'll be interesting to see if the answers come up the same. So in this, it's the same answers, but what do you think your clients believe are the most significant priorities? So first question was challenges. This is, what do you think your clients see? It's going to end up being the same, and that's fine, and that's not surprising. That we're failing in the areas that are most important is disappointing, but we'll see how this comes out. It's a little more spread out. which I think, Brigit, these play to the challenges that you were outlining very nicely. But cost is a much bigger factor, we think, for our clients than it was just in terms of challenge. So I think that's some interesting data points. And then if we segue into, so we've touched on several things related to other countries. Let's talk a little bit about what other countries are doing well, and if we could go to the next Slido question.
Actually, can I just touch on, touch on this a little bit? Right? I mean, yeah, everyone's talking about predictability, and we have kind of forced to rank things. But I don't think that's just one answer, right? The question always is, what are the clients looking for? And therefore, okay, I'll put it in 3 buckets. What are clients looking for? The ability to pay anyone, anytime, anywhere, right? That means I need 100% ubiquity. How are we going to get that? That means I need 24/7. Why 24/7? Most people relate 24/7 to more P2P payments. But if you look at B2B payments too, US dollars is the currency of trade and for treasury, right? If someone in Hong Kong at 11 a.m. on a Wednesday Hong Kong time needs to move money, US dollars, to Singapore, can't be done. That means you stop trade. Someone in Dubai wants to pay someone else in US dollars on a Saturday because Dubai is open on Saturday. Can't be done. That means we slow down the whole supply chain there too, right? The other piece would be the predictability one, which we talked about. Predictability is so important because we have cases ourselves where we are funding a network provider of ours. Even if we overpaid by 1 penny, they levy a fee on us because of the unpredictable nature of the way cross-border payments are done today. Last but not least, data. Data is super important, especially in the B2B world. So the question then is, we have a lot of solutions out there that might answer one of the 3 things, but then that's not good enough. We need to answer all 3 requirements at the same time. The question is how.
Okay, so jumping into what can we learn from other countries, clearly Singapore, and that makes sense. Well, India and Singapore neck and neck, innovation in cross-border, and they definitely have the lead in those areas. So what would your insights be on what's going on around the world, Brigit?
Yeah, it's interesting to see this actually. So when I think about like what are the jurisdictions that have put forward a recipe for success, I would say, in terms of enabling cross-border payments, look at a few things. So one is like a modernized payments regulation or landscape, like I referred to in Canada. The UK has done this, other jurisdictions. 2 is pairing that with non-bank access to the payment system. So Wise was the first non-bank to integrate with the UK's FPS in 2018. Just to give you an idea of what that actually means, we were able to drop price immediately by 20% for those customers and increase the average payment speed from 15 minutes, which is already pretty fast, to instant. And so this direct connection, this is kind of the global infrastructure we built, has enabled this to be faster and cheaper for customers. So when I look at the jurisdictions that were up on the screen, except for India and the US, I think we're directly integrated to each of those. And it's because they have been innovative in their approach to recognizing that there are newer entrants in this space. And usually that's paired with some kind of regulatory or supervisory framework, but then saying, okay, we're also going to allow these qualified non-banks to access directly. So it's cool to see, and I'm sure that slide will be different in 5 years' time as well.
Absolutely.
I'm a bit surprised at the answers, actually. India, I can agree, because India has been, with their fast payment system, putting cross-border payments through for the longest time now. So they give us predictability, speed, everything we ever wanted. Singapore is actually quite new at that. right? It's only very recent that they did that. I'm surprised that no one said Australia. So I think Australia, from a faster payments perspective and a cross-border payments perspective, is one of the most advanced ones, mainly because NPP right now, NPP never had a limit on it. It was the banks who forced the limit on it. That's number one. So as a faster payment system, it gave all the predictability, the speed, the data was part of, it uses ISO 2022, et cetera, et cetera, et cetera. But the key to that now is they open it up for cross-border payments, right? And we're seeing a lot more cross-border payments that our cross-bonds are using to push it through there, again, to give us the predictability, the reach into the whole of all of Australia. It's got the data, and it is predictable. It's fulfilled all three criteria, but on a local basis into Australia. To me, the big question then is fine and dandy. I can get local, let's say even in the US, FedNow, CHIPS, RTP, in Canada, RTL, everyone goes no limit, and therefore I can move anything through it with predictability and all those four criteria. But a currency doesn't only move into their country or out of their country. Again, US dollars is a currency of trade. That means US dollars has to move everywhere by opening up correspondent bank into local payment systems, or something like IXB connecting the faster payment systems, do not solve that problem. So the question again, in the long run, is how do we do that? The question then is the technology that we've created today, which works very well, is it there, or is it advanced enough to allow us to do things? Or do we need a new paradigm, which potentially needs some new rules and regulations on a global basis to do it? So the one that I talk about all the time is not CBDCs, like the second question there, but it's something like Project Agora, where right now seven central banks have gotten together to create a new payment system on the blockchain. But it works on the traditional structure of correspondent banks and central banks, which is very, very important. So it's laying new technology to create a new payment scheme to allow everything that we actually need. It just needs adoption now. I see a lot of nods, which is good.
So we think some of the things that have been done well outside of the US are accessed by non-licensed, by non-bank entities. And, Form 3, the company I work for, started in the UK, and certainly probably a good chunk of our customer base in the UK are non-banks. And that was a very hard discussion when we moved into the US, because they're like, well, go sell to PayPal, and I said, well, we can't really. I mean, we can, but we have to find a bank partner. So, that's something we'll see how that develops. My personal opinion is that's a pretty tall order in the US. That's going to be challenging for the US to overcome those long-standing structure. The other, Ken, I think you touched on, was the standardization using ISO, which we are at least getting there in the US, I guess, in another couple of weeks. Fedwire will move to ISO, so at least 3 of the big money movement systems in the US will be ISO-based. What other lessons from the other countries? Are those the big things?
I think, unfortunately, again, every country is doing it on their own. It needs to be a more community, industry thing to get work. So even ISO in itself, it is not standardized across the board. ISO to me is a language, not a standard. And if every country does it slightly differently, I still might get truncation, which means I might still violate travel rules, not to get my reporting done. So I think the world needs to get together and say, let's have a base set of rules so that everyone works off that base set, so at least the payments can go through properly. What you build on top of that doesn't matter. So I'll give an example for that again too, is in the link system, we said it has to be CBPR, a base or CBPR plus, which means from a data perspective, cross-border, otherwise, it always works. But links build on the ISO, a couple of things on top of that, which is specific for Canada. Things like you can prioritize your payments before it goes into the system itself. You can put it in different queues. You can move your payments between queues, et cetera, inside the Bank of Canada system, not before it gets there. But that doesn't affect the data in itself. All right, just that kind of examples. We have to come together, actually work together.
And Brigit, you mentioned the G20, so obviously they have a process where they are looking at improving cross-border payments. How do you think that's going?
Yeah, I think obviously that work is super important, as pushed forward and made very clear some of the targets. I think, at least from the US perspective and sort of in a new administration, it's also not just about why do we need to meet a global target, but like why should we do this so that American consumers and small businesses can actually benefit from the best payments in the world and not sort of fall behind, which I would argue we already are. So we should look at it also from that perspective. I would also say, like, we look at it from the perspective of, it's not just about WISE, right? This is why we have what we call WISE Platform, where we offer our technology to banks and other financial institutions and basically allow them to leverage our technology and make sure that faster and cheaper, more transparent cross-border payments are available across the board. But we do see fragmentation, and hopefully with some of the global work that's going on, but then also at the domestic level and how the industry is evolving and banks and fintechs are working together, we'll see that change as well.
All right, why don't we move to some of the questions? So the first one is, how does the panel view CDBCs as an enabler of change on this payment? So how will those help solve this problem? Will they help solve the cross-border payment problem?
You want me to start?
I have an opinion, but yeah.
I mean, I can say, well, first of all, I don't think US CBDC is going to happen, but just because of the current narrative here. I would say we get asked this a lot, actually, more maybe in the context of stablecoin and crypto, but ultimately, yes, there is a potential to solve some of the challenges, but I would say, for example, think about it from the cost or transparency side. You're still going to have to sort of pay in to that other currency. And so that doesn't remove that issue from the cost perspective. I don't know, I'm curious, Ken, what you think.
I would say depending on what type of CBDC, right? Again, one of the panels earlier on said, US dollars doesn't leave the US. That means if you're talking about from a retail perspective, a foreign entity should not hold US dollar CBDCs, all right? Technically speaking. But then on a wholesale perspective, all wholesale CBDCs, it's in your master account, so they are here. So that's where experiments like RLN and now Project Gora is looking at that to say, whether I call it a CBDC or not, it's the two-tier banking system that we have, and therefore central bank money is still central bank money. Whoever can hold central bank money is still within the country, but then you can be a correspondent to someone else, and therefore I can move that currency from third country to third country, right? So I don't think it's the CBDC itself. Retail, definitely not. Wholesale, it can help. But then again, it's not the CBDC in itself, but the technology that the CBDC is put on, which is the DLT. So whether you call it a digital asset that is a digital representation or an actual token, call it whatever you want, don't really care, right? But because it's on a DLT, it allows a lot of different functionality. If you put the rules of, say, Project Gora and says you need full transparency, predictability, which we have defined right now, it will happen. But it's not the CBDC in itself.
Okay, so moving on to next one. Do you think there's too much emphasis on speed? Sometimes friction is good, and I know when I talk to our fraud people, they're big believers in friction, and certainly if you have the least bit of suspicion about something, that friction is helpful. There was a very interesting speaker that I saw recently who, and this was just not something I would have ever thought of, was involving mules and online account opening, and that the banks knew that the faster somebody got through the account opening process, the more likely they were to be a fraudster or a mule, because the fraudsters had given them an exact script of here's how it's going to come up and here's what you put in, whereas your average person, me, they're going to ask for my driver's license number or something I don't have handy, and I'm going to get up and go get that. So that was fascinating to me, and the point was slowing them down might cause them to back away and not do it. So what do you guys feel about friction?
I think in the US there is regulated friction already in Dodd-Frank 1073, the half-an-hour rule that I was talking about earlier on. But I do agree that it's not about speed, it's about predictability, right? You need to know how much gets there, when it gets there. Speed is important to the extent of, it can't take 5 days. You need some SLA to say, is it 1 hour, 2 hours, 3 hours? Especially from a cross-border perspective, it cannot be instant.
I think just to add on that, so at Wise, over 60% of our payments are instant end-to-end globally. And I would say that one of the most common questions we still get is, where's my money? So it's not just about when the money lands, but it's also the trust element and knowing that it's kind of not in the ether. It's really, really important, and what we see is that customer satisfaction doubles when that payment lands instantly. So I would actually, maybe to be a devil's advocate, argue that speed is actually more important than we think, and I think you would see that also from sort of how evangelical maybe Wise customers are when it comes to speed. Like, I can't believe it's already there and I have the confirmation. So we're pretty passionate about it.
Okay. All right, the next one is...
There you go. Ken gets to take that one. It's about Canada.
You can take this one. So with Elon weakening things and transforming X or Twitter or whatever into a payments platform, how do you think that's going to affect Canada?
Well, didn't PayPal try to do that to DM? Right?
True.
But PayPal got kind of stopped because the regulators said no, and all that kind of thing. But with X and him and Trump being so close, who knows what's going to happen, unfortunately, right? But from a regulator perspective, no central bank wants to lose control of their monetary policy, right? If you do that, your currency could go up, it could tank, you have no control. And therefore, I don't think that will happen. I hope that does not happen.
And I think that segues nicely into the next question is, do the central banks essentially need to be stricter, give us more strict regulations, or should they be working on guidelines with their counterparts in other countries?
I think it should be more from a guideline perspective, right? Or rather, it could be a unified regulation across the board to make things work. I mean, guidelines, unfortunately, people interpret it different ways, right? If a regulator says it's a guideline, they take it as a rule anyway, because if you fall outside the guideline, you will get fined, whatever, even though they called it a guideline. So I'll use that interchangeably a little bit, but I'm not sure about more strict regulations, but I think clearer regulations, a clearer pathway.
Yeah, I would agree with that. I mean, I think it depends how you're defining these things, right? I think where we see really good engagement with central banks is when there is a constructive conversation with many different players from the industry, consumer groups, et cetera, when creating the regulation, and also obviously leaves room for practical adjustments.
And since we're out of time, let's wrap up really quickly with, I think it's a great question, what do we need to do to influence the regulatory framework? So maybe 30 seconds on that?
Yeah, sure. I think, that's part of my job too, is industry relations. And understanding the global space. A lot of regulators, unfortunately, I would say, do not really understand what's happening or how things are pieced together. They need to be educated a little bit and say, hey, if you put this regulation in, it stops me from doing this, that, or the other, or you need to enforce something so that things actually move smoother along the chain. So I think, yes, we need to influence a little bit more.
So educate, too,
Yes.
I hear you saying, educate them.
Yeah, I would say bring it back to the customer, whether that's, from a consumer perspective, business or enterprise. When we talk to, policymakers on the Hill or beyond, it's all about, no one knows what's going on behind the scenes in payments. And it's not necessarily their business to know, but they need to understand what we need to fix to improve them. And so that's a lot, again, it's in the education bit, but it's a lot of explaining and telling those stories, right, from our customers about why this makes cross-border payments slower or less convenient.
And I mean, regulations have to meet each other. It's case in point is the G20 recommendations and Dodd-Frank 1073. One says go faster, the other one says go slower. What do we do?
Okay, thanks, guys. Thank you for your questions.
Thanks so much.
That's it.